If you're considering investing in a real estate syndication or a fund, it can feel like a pretty steep learning curve. How do you set yourself up for success? How do you avoid beginner mistakes? Well, in this video, I'm going to walk you through the 5 biggest beginner mistakes I see investors make when they're passively investing in multifamily real estate. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. And if you don't know me, I'm Seth Ferguson, a 13-year real estate veteran, host of a real estate TV show, host of a real estate investing podcast, and I'm also the author of the real estate book, Sell for More. So let's get right into it and talk about the 5 biggest beginner investing mistakes I see people make. The first mistake I see people make is they don't build a support team. Now, who is on a support team? Well, it can include many different people, but at minimum, the minimum 2 people you need are accountants. So you need an accountant and you need a good lawyer. Now, you can also have a wealth manager and some other people, but bare minimum, you need a solid accountant and a solid lawyer, both who understand sophisticated real estate investments. Real estate syndications or funds are not basic beginner level investments. These are sophisticated investments, and you need an accountant who understands the syndication and the fund structure, especially how cost segregation and tax credits come into play, because this is going to affect how you minimize your tax situation. Then you need a solid lawyer who understands syndications and funds, so they can actually review the OMs and PPMs and all the paperwork and actually counsel you in the pros and cons, the risks, the rewards of that specific investment opportunity. If you're a beginner investor who is just getting started in investing in syndications or funds, you need to rely upon your support team, their expertise, to guide you, because it's your first time going through it. So you need trusted advisors. So accountant, huge, saving tax and structuring yourself. And then your lawyer has to explain to you the PPMs and what you're investing in and how everything works, because chances are you're a beginner, you're going to have a whole lot of questions, and the syndicator or the fund manager will be able to answer them, but you should also have somebody who is on your payroll advising you and giving you the best pieces of advice possible. And connected to number 1 is structure. A big mistake people make when they're researching real estate investment opportunities is not thinking about structure and how that relates to not only tax efficiency, so taxes, but also asset protection. 2 huge components, and obviously I can't spell as I'm talking at the same time. Asset protection. So number 1, you want to make sure that your future real estate investments, so whether it's through a syndication or a fund, plays well with your other assets, and you're taking advantage of structuring opportunities to really reduce your tax liability and really make your taxes more efficient, so you're not paying too much tax. And then you also have to think about asset protection. Maybe you have a large stock portfolio. Maybe you own a bunch of single-family homes and residential property. How are you protecting all your various assets in the case of a catastrophic event? You always have to be forward-thinking and really making sure that you're structuring yourself in the most efficient and safest way possible. And this is where your lawyer and your accountant are going to come into play and really advise you, because they will be experts in sophisticated real estate investments, so they will know the best way to fit your personal situation. I get asked all the time about tax advice and structuring advice. The truth is, I don't know your specific situation. Everybody is different, and there's many ways that you can structure yourself for both tax efficiency and asset protection. You should be talking with your support team, because they will have all the details about your personal situation, and they can give you the best possible advice. And number 3 is underwriting. And what do I mean by underwriting? Underwriting is the modeling that goes into the investment opportunity. So this is doing the forecast, figuring out your CapEx, your capital expenditure, your business plan for the property. This is what I mean by underwriting. Now, as a beginner investor, you don't have to become a real estate expert or a spreadsheet wizard. That is not what you have to do, but you have to understand the basics. You have to understand the mechanics of a real estate investment, how these multifamily properties make money, how do you improve the value, what sort of things should be expected, those sorts of things. This is what an expectation is for a beginner investor. And a lot of investors, when they first get started, they'll just look at a deal, they'll see the IRR number and it looks really big, and they will invest without understanding why the property is going to be valued at this way 5 years into the future. What's the business plan? Does the business plan make sense? Maybe the syndicator is being too aggressive with their rent appreciation. Maybe they're being too aggressive with market appreciation. Maybe they are planning on exiting the deal at the same cap rate that they purchased for, which is probably not the most conservative approach. Like I said, you don't have to be an expert, but you do have to understand the basics of underwriting just so you have a general idea of what to look for. And this can help you ask better questions. It's not about having all the answers, but it's really having that understanding so you can see something and say, I should ask this. Let me find out why they're doing it this way. This will allow you to have better conversations with the syndicator or the fund manager, but also make you feel more confident in your investing choice. And number 4, a personal favorite of mine is refinances. What is a refinance? Why do we do refinances? Well, in the value add strategy, and I'll put a link right up here to a video I did explaining all about the value add strategy. But basically what we do is we force the appreciation of the asset so the value of the asset goes up because we've increased the NOI, the net operating income. And at this point, a lot of people plan to do a refinance and put more debt on the property because the NOI is higher so the property can support that new debt, and then return investor capital so the investors would get some money back. Here's the thing. Refinances are never guaranteed. Maybe the debt market is absolutely horrible in 3 years when you're planning on doing your refinance. Like, it's not guaranteed. So this is my pet peeve because some people will actually work in refinances in their underwriting. So they're basically promising the investor, in order to hit this return that I've promised you, we're going to do this. Well, it's not guaranteed by any means. So if the refinance doesn't happen, your 17% IRR can quickly disappear and it just goes up in fairy dust. So as a beginner investor, if you see a refinance being worked into the underwriting, and this goes back to understanding the basics of underwriting, if you're an investor and you see this in, well, you don't have to do a big X on the deal and not go forward, but it should prompt you to ask better questions and find out why. What is the strategy? What makes them so sure that this refi will occur? What are the contingency plans if this doesn't happen? This is all about being a prudent investor and understanding the basics so you can ask better questions. So if you see the refi worked in, it doesn't mean it's the end of the world, but you should be asking questions and probing to find out why they're actually working this into the underwriting, rather than leaving it as a bonus and a happy day if it does happen. We're about to get to point number 5, and if you are interested in learning more about investing in apartments, I want to invite you to my free webinar. I run this live all the time at www.discovermultifamily.com. Join me and learn about how you can invest in apartments. So let's get to number 5. This is probably the most important thing that has nothing to do with real estate, and I call it having a decade vision. And we actually spend an entire week on this in a course I run called Discover Multifamily. This is probably the most important foundation you can have for your investing. Because the question is, where you want to be in 10 years, what you want your life to look like, will dictate everything. Every single decision you make will go back to your decade vision. How you structure yourself for asset protection goes back to where you want to be in 10 years. How you structure yourself for tax efficiency. This will change depending on what your decade vision is. The people you bring onto your support team will definitely change depending on what your decade vision, what your goal is for the next 10 years. Somebody who wants to travel the world versus somebody who wants to stay put. The people they bring on their support team will be totally different. How they structure themselves will be totally different. The actual properties they invest in will be totally different. So it's really important to have this decade vision and have that vision for the future. And this is something I did not have at all, and it was one of my biggest mistakes I ever made. So decade vision is huge, but all 5 of these mistakes are mistakes I see people making all the time. So if you're interested in learning more about investing in multifamily real estate, join our free Facebook group. I'll put a link right down below. It's a great group of people. And if you are an accredited investor and you're interested in learning more about the deals I'm currently looking at, head on over to callseth.com and set up a free 20-minute phone call. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think. It really helps out the channel. And until next time, happy investing.